Hello everyone and welcome back. Today I want to talk about taxes. So, as a disclaimer, I'm not a tax expert, I'm not a tax advisor or anything, and I will most definitely not try to encourage you to commit tax fraud or something illegal. But as you know, taxes might add up to almost 20% that is deducted from your net profit. So it's as a big position in your balance sheet, important for you as an entrepreneur to know about taxes and to have a sensible way of keeping them as low as possible. So for that, to bring you an example, to bring you something to look at, I have created a basic holding structure, an international company structure where you would pay zero taxes. So let me run through it. So you as the owner of the whole construct of the company, in Dubai. Here, it's pretty commonly known that you don't have any income tax, no capital gains tax, and yeah, that's pretty much one of the most important factors on why so many entrepreneurs go and set their residency up in Dubai. So the next piece of your structure would be an asset management firm in Liechtenstein or in Panama. Here you don't have any capital gains tax. You can, pay out dividends without any taxes put on it, and most of the time in Liechtenstein you would work with foundations to allocate your resources. So your asset management firm is taking care of holding all the real estate you have and bigger assets where you want to have it allocated in the world, so that you and your business can run properly. Next structure would be a holding in back in Hawaii. So here you would bundle all your profits from your operative companies, and those would be your operative company. So maybe it's you run a trade business. These would be set up in Singapore or Hong Kong, since here you don't have to pay taxes on any profits you made abroad. So for profits you made in Hong Kong or in Singapore respectively, you would need to pay taxes, but not for international profits. So that's why you would bundle all your activities in Singapore and in Hong Kong. Would mean in effect that your customers pay the Singaporean or the company in Hong Kong for their services or their products. Next to that, you would have your IP company in the Caymans. So all your patents, your intellectual property and licenses would be held by a company in the Caymans. This is the trick or the measure that big American companies in Europe do as to save themselves from paying too much taxes. So there's like a really famous example of the Irish Dutch sandwich, where you would pay companies in countries like Cayman Islands where you don't have big tax burdens on your intellectual property, and then through that funnel out profits they made from trade or from services in Europe, out of Europe back to the US. So this is a basic structure. You would need to set it up with lawyers and additional experts in order to have it like full bulletproof. But this setup would cost you around about 20 or 30,000 US dollars to set up. So it's not that big of a deal as many of you might think. And it's actually what a lot of big companies and rich people do in order to save taxes. So set up an international structure. There are many more. This is one example of how you can do that and set up an international structure. Now I want to get quickly into measures you can take without setting up an international structure. So 5 really basic tips for saving yourself from a high tax burden when you're operating in Switzerland are those 5. So first of all, just set up your company at the right place, in the right place. So Zug and Schwyz, they're famous for having low tax rate or companies, around about 12%, and this differs from other cantons like Geneva or Jura that have tax rates of up to 20%. Then next thing you can do as an entrepreneur, as a business owner, is deduct all and every expenses that are deductible. So for example, you have your R&D cost, that you can in most cases deduct with even more than 100% your everyday expenses that are related to your company that often get forgotten, like your company car. They can be deducted as well. You should always use depreciations in the right way. So your inventory markdown in Switzerland is allowed to deduct up to a third of your inventory per se. So this might be for a trade company a big portion of your balance sheet, so also big impact on your tax burden. Next, use provision and reserves. So if you are in any jeopardy of having to pay expenses in the future, you can deduct them from your taxes for the current year. Next thing you can do that's pretty easy is combine your salary with dividends, so you have some pivot point where it's smarter to pay out dividends instead of paying yourself a salary for the tax burden on your personal income. So that's what you can optimize. And small but funny trick, your VAT refunds, especially if you are a startup and your expenses exceed your revenue. In this case, you can get back the value added tax that you paid on the expenses towards your suppliers. And this is one funny way that some startup even finance themselves. So yeah, these are 5 easy ways. As said, I'm not a tax expert. Your tax expert can come up with loads of different strategies. I can too if I look at the balance sheet, but in general you would need to have some sort of legal expertise to do any of these measures in order to reduce your tax burden. And the message I want to convey with this video is: get familiar with your accounting, get familiar with your taxes, and don't be shy to set up an international structure of companies if it benefits your company and your business. And yeah, enjoy saving your taxes.